Hey everyone, welcome to another rousing edition of the Orita Podcast. I am very honored to have Rick Watson. Rick and I met many years ago where I was trying to slang some software towards him when he was doing some consulting. And then it turned out he's one of the best writers in the space and the best thinkers in the space. So he's somebody who I have been fortunate to bump into, I'd say, at pretty much every conference for the last many years and get to steal all of his insights from his writing. Rick, would love for you to introduce yourself and thank you so much for being here.
Yeah, thanks so much, Aaron. I really appreciate being on and our relationship over the years. Yeah, my name is Rick Watson, CEO and founder of RMW Commerce. RMW Commerce is a boutique consulting firm that works with brands and retailers primarily on growth strategy. We work a lot of times with management teams, with boards of directors on really what's next for a lot of these brands as they get new investment, they start new lines of business that they weren't doing before, or maybe existing e-commerce lines of business aren't quite going as they expected when they originally bought the asset or something like that. And so I founded that company on the back of really working in e-commerce mostly since commerce was a thing. Since 99, I started with a company that would become Channel Advisor. So really blessed to be working with that group for 10 years. And then I moved on to other companies like Barnes & Noble, Pitney Bowes, and then Merchantry. And then, so I have, I post on LinkedIn. I have a number of podcasts as well where, I always enjoy speaking, writing, and talking about e-commerce and unpacking what that means for everyone.
Rick, thanks. And we're going to jump into the e-commerce side versus the channel, the omni-channel, and everything else. Very quickly, for those who don't know me, Aaron, one of the co-founders of Orita. We do AI customer segmentation for a bunch of brands. But before this, less illustrious, but similar kind of journey as Rick. I ran a brand for about 7 years full out, and then co-founded a company called Passport that does international shipping and was at Loop Returns and exchanges. So kind of inch deep, mile wide in commerce, though most of my writing is extremely pithy or sarcastic on LinkedIn. So I don't have the insights to share, but I have the scars probably. They're somewhere deep inside. Rick, I actually wanted to start with kind of the RMW side right now. When you said you get brought in to bigger companies, right?
Yep.
So like you and I have talked, it's like companies that really exist. It's mid-market, big brands that have, kind of made it, but obviously want to go a step or 2 or 10 further. When you get brought in, is it normally by the operator? Is it by the investor? What are the kind of consistent things at that point?
Yeah, it's a mix. So it's often because of a relationship with the CEO or an investor that is looking for someone to help a new CEO. And a lot of times what happens, particularly in a private equity situation, they buy an asset that is underperforming in some way, but has a good brand name. They bring in equity capital. They start to bring in talent. But then a lot of times what happens is the CEO is usually from the industry. Like they really know their space well. They know the product. They know the merchandising. They know what good looks like in commerce, but they've never had to build it themselves. And so they're looking for someone to accelerate their journey. And I think they and the investors are usually aligned on that same thesis.
You've kind of touched it all, right? You mentioned growth here, but you've obviously run product, right? You've been the CEO of a company before.
Yeah.
What are kind of the hardest things that it take, or kind of the hardest experiences for those operators who are kind of going from the 50 million to the 200 million or 500? Is it truly turning on a new channel? Is it rethinking old processes? Kind of all the above?
It's always the hardest to let go of what you're doing already if it's passed you by. It's by building new things is frankly easy if you're committed to it and you're willing to disrupt what you're doing already. Truly, like the whole Clayton Christensen innovator's dilemma is by far the hardest thing in business, period, I think. And so a lot of these companies fall into that kind of criteria where have been good at X, Y, and Z. That's made them sometimes a lot of money over the years. However, the profits are now starting to dwindle. Maybe customers are starting to dwindle. And so the curves that they used to really rely on are, they recognize that they need to invest in a new direction, but that confidence in their investments, in some ways, it's like, how do you help give these companies confidence that they can make the right bets for what to do next?
Interesting. We see this a lot on the marketing side, and this is me as the operator, where you get into a rut of discounting, right? And they're like, okay, cool,
Right.
we're now a discount shop, and it's just so easy, and it's a drug because you can just send that one more email with the one more
totally a
discount.
drug.
For brands, does it tend to also be like, hey, we're used to this tech stack, we're really reticent to move on to Shopify or to move on to like the newest technology? Or are you seeing it even with like quote unquote AI tech that's coming.
Look, it's a mix. I would say it's sort of two buckets. One is you don't know what good looks like. And so they're actually bringing us in before any of this stuff that you and I think about, like the tech stack and the apps and whatever. They're more like, if we're going to build an e-commerce business, what is the potential and how do I know what good looks like before I even invest 5, 10, 15, $20 million in the next year on this journey, which involves people, involves process, and involves new technology. They may have already made some, any consultant will tell you like the best customers are one who have already like tried to solve it themselves, but then couldn't. And I think that's probably true of in my history, it's true of software companies too. And I imagine you find that true for segmentation.
I find it true across, like my first job out of college was at Deloitte doing like an ERP implementation. And I was whiteboarding for one of our colleagues the other day where I was like, this is what a gap analysis is. And it feels like literally what you're doing is saying, here's where we want to go. What are the gaps? What are the highest leverage things we can do?
Yeah. And so I think the other thing is like negotiating disagreements between the team. There might be a future looking team member who's getting resistance by sort of more backward looking team members who are, they have a big revenue pile to protect. And so the CEO is usually in the middle of like, this person brings in the bacon. This person is promising a lot of things, like what's real, what's not. And so sometimes having a fresh pair of eyes can help people decode where's the smartest way to spend my time? What are other companies doing to give the company confidence and then a plan to kind of take those next steps?
A lot of what I've seen you do is also like the legacy companies. And I don't say legacy in a derisive manner. What that means is they've made a lot of money and they're very good at what they do and they have a strong brand. And so the legacy companies coming more to like the more DTC stack. But you also obviously are like involved with the DTC companies who really have online dialed in and e-commerce, like they're there, who are going omnichannel. What are the mistakes you see those guys taking? Maybe it's the DTC 1.0 guys or however you want to take this.
Yeah, I think not recognizing where D2C has limits. And I think where there is clear intent and clear product market fit, D2C is a great channel because you already have somewhat of a captive audience that's coming to you. If you were lucky enough to have subscriptions, you have a business where you wake up in the morning and there's cash coming in versus having to attract someone. Where D2C businesses tend to tap out is in the like $100 to $150 million range, where the people who are actively looking for this better part of their lifestyle are tapped out and the rest of America doesn't know who you are. That's when other channels, particularly retail, wholesale, come in because that's where most commerce is these days.
I know the approach is always like, I'm not trying to pin you down to one answer because it depends, right? Like how capitalized are they? Do they have a product that would sing on shelves or they need to reformulate whatever? What are the, like, if you're going to place some bets forget a subscription brand for a minute, for just like a generic, like apparel, footwear, just like a brand that's growing really fast on Shopify. If they are picking their head up to go omnichannel, is it actually the first is just start with Amazon, or is it do leap and like do the pop-ups, or is it like retail? Yeah. How would you even approach that?
I mean, I think Amazon is a huge one that you can't ignore. Amazon. I mean, it represents a huge percentage of commerce.
For those who don't know, Amazon is this like marketplace. It's got everything.
Yeah. I mean, represents, depending on your metrics, 40 to 50% of commerce or something. It's crazy. And so I think D2C has not traditionally been kind to Amazon, meaning like, oh, I don't need to be there. I'm cooler than that. So I think that's an obvious angle. I think being in retail is a much more important step than setting up your own pop-ups because you have the built-in distribution. Like if you're going to go into Target or Nordstrom's, you don't have to be in every store day one. But if you can introduce your brand in the right way to a new audience, then it can give you a lot more confidence to develop your own brand stores in the future that are flagships. And so I think if you look at where, the hot brands, some of them have set up stores too quickly without leveraging retail, meaning like, oh, we're going to go it ourselves and everything like we did direct to consumer. And so we're going to develop our own stores. And I think the problem for a brand is it's very hard. Like direct to consumer brands that do well tend to be dominated by like one or a couple of SKUs. It's very hard for the average brand in that situation for your SKUs to carry a whole store. The store is just not productive enough in the places where you want to be. And so then you come to the dilemma like, oh, I don't want to be in Walmart, or maybe I should be in Walmart. And so like that's the dilemma people have is like, I don't want to appear next to competition. How do I control the experience? Am I diluting my margins? I love this D2C margin. I don't want to give away the farm here.
One of the things that we used to think about, and again, this is going back a decade, right, and running the brand, was how do we put our kind of like our core SKUs on Amazon with the spirit of if somebody gets our product and they like it, they will then come to our site to go explore elsewhere. Is that still a reasonable strategy? Is that a strategy that also works in retail, or is retail like, no, we want, if you go to a Walmart or a Target, they want everything?
It's very rare that retail wants everything because they have to carry the risk for everything. So they want the things that are, the reality is they want the things that are going to move. Amazon doesn't care as much, but they'll let you list everything and encourage you to list everything because it's not on their dime, where the inventory is coming from. And obviously, if you're using FBA, which a lot of people, it's a good place to start. You need to decide what you're going to sell through because immediately you're segmenting your inventory. And so that's kind of your first pivot point is like FBA is really good for fast moving items, not quite as good for slower moving items, because they're going to charge you to store it and everything else. But if you're going to introduce yourself to the world on Amazon, your top selling SKUs are definitely a great place to start that process for sure.
When you think about kind of the inability of brands to go into this kind of like omnichannel world, or maybe not even the inability, maybe the challenges that they'll have, is it more an understanding of the financial side, right? Your comment was, hey, it's very hard to give up my D2C margins. Is it more a strategy gap? Is it, look, the packaging needs to be updated and it's just like, you don't know what you don't know about kind of going down the wholesale path? Yeah.
I think that there are really two gaps. One is, I would say D2C was sold as a dream a little bit for a while, and it was intended to be like, this is all you're going to need. All this stuff that people used to do in the past, we're not going to have to do that anymore because now we can go direct to consumer. And so I think, particularly post-COVID, that reality has come crashing down that like retail is not going anywhere for a while, and it's still 80% of commerce. And e-commerce is still growing faster, but do you want to grow or do you not want to? Do you want to grow faster, or are you okay growing more slowly? And the key question is really, how are you going to introduce yourself to America? How do you get your brand known? And if you don't have a key answer to that question, if like 80% of your audience is shopping for shoes in Nordstrom's and Kohl's and Macy's or like wherever they are, you have to go where those people are. And so what are you replacing? What problem are you solving? Where does your audience go to solve those problems? If it's a techie in New York City, then it's reasonable to assume that they're going to find you on Reddit or, like wherever. But not everyone is shopping, finding all their information that way.
As we discussed, if it's my mom in Shaker Heights, she's going to actually be in the store and once in a while see something, see in the magazine. Yeah. Thank you. It's really interesting to think through. And I deeply miss running a brand, but the complexities of running a brand are something that, obviously I don't. It is interesting because you mentioned subscription businesses before. And I always think if I were to start another brand today, 10 times out of 10, it would be subscription. But even if I look at one that's doing a great job like Garoon's, their growth, at least from the outside, seems like it is the fact that they're in every storefront right now. And they have really figured out how to tell that story and get in front of everybody, the 80% of people who aren't going to find them on Shopify.
Yeah. I think the limitations of your story. Do you have a great audience that you're building? How does your audience find you? I think most subscription businesses also seem like they're also capped because it has to be, and look, if you're in CPG, it's great because you're sort of naturally replenishable. Everything else, it's a little bit more open. Like, is this actually a subscription business, or are you just trying to make it a subscription business? Is sometimes you see these things out there.
We did have a Watch of the Month club
Yeah.
for my brand in 2012. It was great. We would email people. I think we at peak had like 80 people who gave us $30 a month for a watch.
Right.
It
Yeah.
was awesome.
It's really great for those 80 people, but it's not going to be 80,000 people.
Well, Rick, my whole argument was 300 million Americans, 600 million wrists. Like that's an obvious business.
I
So,
love it. I love it.
yeah, I can spin anything to feel like it was the right choice.
Yeah.
I do want to stay on marketplaces for a minute. You've written a lot about Amazon, obviously,
Mhm.
but I know you're looking at what TikTok is doing, what Shopify or Instagram are doing. What are you most excited to see in the coming years around kind of marketplaces? Do you see anybody being able to really directly compete with Amazon? Or if you had to place a bet, who would it be and why?
Yeah. I mean, I think it's fascinating. I mean, I think the only answer can be really Walmart,
Hmm.
because they have the scale, they have the reach, they have most of the capabilities that Amazon does. Their fulfillment network looks different than Amazon because they have stores, and so they're fulfilling from stores, whereas Amazon is fulfilling almost exclusively from DCs and same day facilities that are close to cities. But they have kind of replicated at this point. Walmart 10 years ago, you would not say that. You were like, doesn't seem like they're going to figure out e-com. Their marketplace is kind of substandard, and it feels like they've really closed some gaps there where marketplace is growing super nicely. Their e-com is growing something like 30% a year. Amazon's e-com is growing more like 10% a year. And so the growth rates are super nice. They have an anchor of grocery, which is, if you're, I don't know. I've been researching this topic recently. Grocery, something like 50 to 60% of Walmart's revenue. It's just kind of like the number in my head based on the fact that they don't release that number. It's about the best I can get to. And so Amazon is now trying to figure out how to catch up with Walmart and grocery, which has been kind of exciting. But I think Walmart is probably the answer. I think everyone else is not there to challenge Amazon. Everyone else has to coexist with Amazon. And that includes like TikTok Shop. TikTok signed a deal with Amazon ads. So you can actually, be targeted and use your TikTok behavior to be used, for when you visit websites on Amazon properties. A lot of TikTokers send people to Amazon for monetization. TikTok Shop, has become a pretty high GMV channel, relatively speaking, especially compared to what people thought it might be. But it's not going to challenge Amazon for Amazon's core use case. You can't replicate the logistics. And at the end of the day, you're either helping someone find a product or you're helping deliver the product. All the costs are in the delivery side.
You just don't want any returns, and you don't want shipping in your phone.
Yeah. You should know about returns more than me.
It's been my life. It's so fun. Going back to the marketing side, where like we don't ruin Christmas for anybody. We're just like, hey, we're gonna help you email Rick when he wants to hear from you, and you'll make more money. And just like it's a very simple customer flow. I do want to stay because you kind of mentioned the ad side, right? And you mentioned TikTok. How do you think about like retail ad networks? Is this, I don't even know what my question is, but like kind of Rick Watson, retail ad networks, discuss. Like, where does your mind go?
Yeah, I mean, the short answer is it's harder than ever. I mean, you used to have what are called trade dollars, which would help you understand like where you're slotted in a store. And I think a lot of that is becoming a more comprehensive media strategy for the brands, because all these retailers are now have digital properties. In some cases, they're exclusive digital properties. In some cases, they're partnerships with other channels, such that if you're in Amazon's advertising network, now you can select to have your ads appear on Pinterest or, Thursday Night Football or, or Prime Video, like all these different outlets, or on Amazon. So I think the digital ad revenue that comes with these ad networks really have been one of the biggest saving graces for retail, period, for a lot of these companies, because retail is hard. It involves taking inventory risks. Inventory risks are inherently tricky. And as a result, if you look at most of sort of like Walmart and Amazon's profit dollar growth, it's all digital services. And by that, I mean also like including advertising in that bucket.
If you were starting a brand and you were starting down that DTC path, would you begin your ad spend like within the Amazon, TikTok, ecosystem, or like where would you
It's
place
a
your
great
promotion?
question. I still think right now you have to go where the consumers are. I actually get asked this question fairly regularly, several times a year. I'm an entrepreneur. I want to start a brand. How do I get into drop shipping? Or like people always start with like a very specific idea of what they want to do, but then they forget the audience. And so I almost tell people to like, don't start a brand. Like, build an audience. And if you have an audience, then you have more open to you in the future, meaning you could develop a content business where brands sponsor what you're doing. You can develop your own product lines based
Mm.
on you reviewing other products, and that gives you ideas for like how the space that you care about is better. But at the end of the day, we live in an attention world, and an attention world is based on unique people that have interesting things to share, and as a result generate followers because you're a mommy blogger or you're a tech reviewer or like whatever it is you're passionate about in life. That's to me the foundation of building a brand, because otherwise, especially for an individual, if you are constantly having to pay someone else to send you traffic, then you've kind of lost from the beginning because you can't generate attention on your own. So brands like Joyride, that are founded by, somebody who has already like millions of YouTube followers, he could start a whole line of products, in a month if you wanted to, right? And because that audience is there and the audience already has that trust and what the person is talking about. And you develop that content develops trust, which gives you credibility and authority in a domain that then can become your brand, like your physical product brand.
Really helpful. It makes me think a lot about like Into the Gloss, right? Like Glossary
Yeah.
found, and
Yeah.
how for a while that was the pinnacle.
Yeah. It's
And it
just
was
a
so obvious,
blog or just a newsletter.
but it's deep passion and you actually understand your audience. I think that translation, and one of the things we're kind of discussing, even if you get to that $100 million brand, is like you have to know your audience intimately well. And then to expand, you can also add new products. But if you're adding products that don't speak to that audience, right? Like you actually need to figure out what is that engine that's going to keep going.
Yeah. And sometimes even if you think you know the audience, it's like they're not following you. Like Allbirds, I think had this problem with its follow on products, and they just like, there wasn't as much uptake. And so they were like, had to close some stores and sort of retrench, going back to what they were known for, which is more or less a single set of sneakers, right?
Yeah.
Kind of going back to this D2C problem.
But it still goes back to like, go back to an awesome product, right?
Yeah,
It's like if your
exactly.
product, to your point, you need the reason to win, right? In that ecosystem and in the marketplace. So where are the people? We kind of indirectly are talking a lot about Shopify, right? Like a lot of brands are referencing their Shopify
Yeah.
brands. And obviously this ecosystem matters so deeply. I'm curious, do you have a bear case for Shopify? And like, what is there any like non-standard bull case where you're just like, oh, you see this happening because you're so deep in it?
Yeah. I mean, the bear case for Shopify is, I definitely think there's a bear case for Shopify in enterprise retail, meaning like if you're over $1 billion, you have infrastructure based on companies like Oracle and SAP, and the Shopify just doesn't do the things that these other companies do. It does a specific thing super well, and it's not really designed for replacing the entire infrastructure of Nike. I mean, I'm just use that as a case. Like, could they build them a great website? Sure. But the 20 other systems that are now feeding that website ultimately have nothing to do with Shopify, right? And so I think the case for, the bear case for Shopify is really, there are probably a couple of them. One is, as a company does well, there's always sort of like the arrogance factor. Like, do they kind of overreach what they think they're going to do, and the new bets don't pay off? I think logistics was, in some cases an example of this. Or they're going to get into advertising, but do they have a right to win in advertising? They don't have like a network to be built up, and it's a very established competitive moat in those markets. I think the other bear case in the enterprise in Shopify is if you look at the top 100 companies in the world, a lot of them are dominated and serviced by these big global system integrators, so like your Accentures, your Deloittes, and TCS, just huge global IT firms that make money helping people with big, complex IT problems. Shopify is like pretty simple, right? And so as a result, a lot of these big global IT firms can't or not are not able to make a lot of money from Shopify itself. And so if you talk to a lot of these firms, you're like, oh, my business with, and I'm just gonna throw an idea out there, like Contentful is like bigger than my Shopify practice, which is a little bit crazy to say because Shopify is like, a huge company and Contentful is one of a number of CMSs. But the reality is, when Shopify was born, it would cost someone 300 to 400K to set up a Magento store, right? And now it costs, what does it cost to set up a Shopify store now? Like, what's the average build pitch? 50K?
I'm just going through what are the apps you put
25K?
in, what's your short list of who do you add? It's like, oh, you add this CRM and this returns and this email. I'm like, but yeah, it's dead simple.
It's almost too simple for enterprise. And so as a result, I think in some cases they're not taking seriously enough in those areas.
If you look at the mid-market guys today, the $100 million brands, the $500 million brands who are growing, do you think they're going to be able to build their whole system around the fact that they're on Shopify and then go find all those complex nodes elsewhere? Like, is it more we just need to be patient and see it keep going? Or do you think they're also going to jump off?
I do. It's totally possible. There's nothing inherent in Shopify that would not allow them to connect to other systems, whether it's product lifecycle management software, like bigger omni merchandising systems. If they have in the past, if someone had like a fleet of 1,000, 10,000 stores, like Shopify PS, it's not even the list anywhere, right? You're going to like an IBM or a Micros or you're a different thing. They keep sort of pushing up where they want to go. And so I think the other risk to Shopify is really the patience of dealing with big enterprise and how long it takes people to make decisions, and Shopify likes to go, as it's evident from the company culture.
It's funny. We are moving up market and I am probably the most impatient person in the world. somewhere in that ballpark, right? It's like measure twice, cut once. I'm like, I don't even measure. I don't let's go. And it is very interesting to think through like the buying cycles, right? And I know this obviously from past lives, but I certainly would see this from a Shopify or anybody who's dealing with the upmarket brands or the upmarket anything is you just need to like not tick the boxes in a perfunctory way, but really make sure that the CISO is bought in and the CTO is bought in and do that work.
It really brings up a topic for like, how is Shopify in these deals? And because I think 5 years ago, it was not the case. Shopify was like a little bit of an unknown, a little bit of a risk. And so I think where Shopify has really won is, I hate to say it, not that I hate to say it, but it's just kind of interesting. I think a lot of times Shopify has really won over that investor set, meaning like you're watching CNBC and Harley comes on and you see Harley like, year after year. It was just sort of a thought experiment. Like, how many times has Harley been on CNBC in the last 5 years? And I was like trying to come up with a good prompt to ask ChatGPT for that. It's like 12 times it came up, which seems like a lesser number than I was expecting. But I do feel like Shopify in the C-suite of enterprise is 100% being pushed down. I think traditional IT they want to own generally, like I'm broad strokes generally, they want to own their own tech. They like the vendors even if they don't like the vendors they're working with, they like to control their domain. And the more flexibility they have, and it looks like the things that they're comfortable with, and a lot of times these platforms were in place for 10 plus years, it's a more traditional Oracle, type solution or something like that.
When you're talking to Series B and beyond tech companies, right? So the folks who've hit 10 million ARR or something, right? They have enough reference clients, they're real, and you're helping them understand how do you sell into the upper mid-market or even into the enterprise space. Is it kind of the same thoughts that you have for Shopify, or kind of newer technology? It's actually like that CTO or the director of IT who might be a blocker for Shopify might just be, oh, I want this to be my pet project and move things forward.
Yeah. I mean, I think the biggest thing is to understand like what titles, it's kind of back to enterprise sales basics. Like, what titles are you targeting? What's your ACV? Can your ACV meaning your annual contract value, support the sales model that you're going after. Because the worst thing actually is to say like, look, I won all this enterprise business. Oh, what did you charge them? Not $30K a month. Like, that's not going to work. Like, SaaS has traditionally had a dead zone, almost like in between 15K and like 75K. And if
Rick,
you're
no
like
matter how many times people tell me that, I'm going to assume that we can just break through. No, but yeah, for sure. I think keep going, but it's spot
yeah,
on.
but if you're like in that zone, you probably need to be in more like squarely in the center of the middle market, because that's a decision that people can make more quickly. You're going to have a sales rep involved, of course, but it's going to be easier for them. You're not having to compare yourself to 3 or 4 vendors. You're not unseating some big legacy incumbent. In the enterprise space, how much tech is involved is a big pivot point for any product. It's just so huge to be able to say, I'm on a roadmap, or I can do it. If someone agrees, can we do it? That has just always been a big part of software go-to-market.
I love it. How much of that is like getting that buyer to be excited, and how much of that for the kind of like the tech folks listening is just make your product dead simple to integrate, make it super easy to use? Or where's friction actually benefit you versus it's painful?
I think it depends a lot of times on the type of product. Is it for a department? Is it for multiple departments? Is it across the enterprise? Does the department owner have the decision to make this level of purchase on their own without a lot of hassle? Or is it something that would reach the CFO's radar because it's either above a certain amount, or it touches multiple departments, or people would require to change their way of doing business? Like, if you're a pixel on a website, right? I think at this point, that's kind of like a well-known thing to do. The CFO doesn't care unless you're going to charge him $250,000. He knows how to do it. At this point, it hasn't always been true. And I think in some companies that seems harder than it should be still. I think that's a problem. I think what people underestimate a lot of times about enterprise software is that how much buying has become a group sport, meaning like, even if you don't think there are multiple decision makers, there are, meaning like your user is not your buyer. Your buyer is the manager, who doesn't know as much as your user. And the manager may be dependent on, especially in this economy, CFOs are making a lot of vendor decisions, a lot of them.
So if you're, you posted last week about your experience as a CEO. I'm going to try and thread the needle here. And one of the things you talked about was like being great at marketing. If you think about that, and so like, you don't know in depth like our strategy or anything, but you're advising me, right, for Orita, and we're trying to move up market. How much should we be trying to get in the ear of that CFO versus how much should we be like crafting everything for the director of retention marketing and the CMO?
Yeah. I mean, ultimately, I think there's always a CFO sale to be made if you're trying to charge above a certain amount. So I'm going to say like, look, if the company wants to be $25K a year and less, don't worry about the strategic sale, because it's too complicated, too long, and it's not worth the prize that you're trying to get for it. You're making your sales cycle more complicated than it needs to be. But if you're trying to get like 100 to 150K for your product, you 100% need to be selling to the CFO, because they need to understand where that value is derived from. Their models need to incorporate the fact that this is going to help you with retention. As a result, I'm getting more leverage for my marketing spend. And so how the company works, in some cases, I find that like the like we've coined this term here, and Nick Kaplan has helped with a lot of it, is the Renaissance CFO, which is like they're involved in everything. And in many cases, a lot of times the CFO is like the shadow COO of the company half the time.
You gotta tell Nick I said hi. It's been a minute since I bumped into him. I'll sucker him in next. It is funny, my third project at Deloitte, and so this is 2006, which lasted for a couple of years, was in finance transformation. And the idea was cross industry, helping the CFO understand how to go from being like the operator to the strategist. And then like the phrase we had was the catalyst. And I see that happening. It feels like anytime that there is complexity in the markets, or cash is short, or people are like really paying attention to profitability and not just growth, it is actually the opportunity for that CFO, not just to be the bad guy, right? To be the one who's like, hey, here's how we can bring the company outside.
Yeah. And if you have a great CFO, they're not just trying to find the cheapest thing. They're trying to find the highest leverage things. And
I
so
love
I
it.
think helping tell that story is super important. Not that there aren't CFOs who are trying to do the first thing, because they definitely are.
Yeah. I mean, I think good CFOs have to do that first, and then it becomes about profitable growth, right? It's the same for
Yeah.
any business. If cash is king, if you run out of cash, you die. You
Yeah.
need to live to fight the other day before you get to be strategic.
Yeah. Yeah.
All right. So we got about 10 minutes left, and I'd be remiss not to bring this towards OpenAI and ChatGPT. Walk me through how you're thinking about the
Yeah.
ecosystem and changes. And I don't know, what are the questions you're thinking about exploring in the next 6 or 12 months?
Yeah. I mean, look, obviously there's been this huge innovation that OpenAI has brought to the world. And I think there are a couple of ways to look at it. Um, One is if you just think about the what an agent is. I kind of view agent as a helper, like a helper to a human, either sort of, and you can say that is an autonomous helper or kind of a very dependent helper. But at the end of the day, at some point, that helper is dependent on a human. And so if we think about commerce, you start to think about the funnel, right? Awareness, consideration, like research, consideration, deciding where to buy it from, even with service. Am I going to be able to repair this? Should I send this back to the company? Are there people around me who could fix this? I think agents are helping with all of these things already. I mean, so much like Google's commercial, recently there's a woman talking with her phone in the flower shop with a video camera trained on the merchandise in front of her. To me, that is like quintessential what agentic commerce is about, which is like helping people decide and transact and make better decisions. And I think we're dealing with technology that just didn't exist years ago. And so I think that's kind of one side, just from a definitional point of view. It doesn't have to be something that someone goes off and buys on their own without consulting a human to be quote unquote agentic commerce and be useful.
One of the things you kind of mentioned in your list going through, right, was actually the service side and the
Hmm.
experience. And I think the piece that a lot of brands miss, and again, forget brands, just kind of
Hmm.
anybody is missing, is like the goal is not to make the sale. The goal is to get
Mm,
the customer to love the product and to keep the
mm,
product. And there's a lot of work to be done
yeah.
on better customer support questions. Brian Sugar, who's one of our investors, wrote a really great post the other day. And I actually talked to the founder of Bernie's Bianca about this. Also, where like reviews and
Uh,
honest reviews deeply matter now in a way that
hmm,
they maybe haven't for a while as well. Because
yeah.
you want somebody who gets a product that they love, and you want them to use the product in the right way and get the support in the way they want to.
Yeah. I think service is definitely something that's something you for sure hear Klaviyo talk about a lot in term, it's important to them. They just introduced 2 new products for service and support, and they're thinking about this product. Obviously, Salesforce is thinking about this space, a lot as well as really anyone that's kind of in this space. Amazon has recently talked about their Rufus product, where 60% of people that are using Rufus have a higher purchase intent than everyone else, undifferentiated on their website. So it's how do you support the decision to purchase the item, and how do you help people after the purchase get the most out of this product? The more there are so many categories that are just in that realm of like, just think of a simple one, fly fishing, you have like experts, and then you have like the rest of us. So how do you know what gear do you need and like everything after you get it? How do you make sure you don't chuck it into the river if you're using it incorrectly?
You're speaking
Right?
from personal experience, so you just
Yeah.
throw it.
My wife's father is like one of the experts, and he has tried to teach me in Ohio how to use some of his rods in the backyard. So I'm just kind of using this as an example.
If you think about where kind of ChatGPT is going and where it maybe stops right now, and you think more about the earlier stage tech companies that exist, maybe do you have any sort of like requests for startups, or are you
Mm.
excited about developments that are happening in any part of the tech stack that really stand out?
Yeah, I mean, I think any kind of supply chain planning, I'm always interested in, because inventory is the hardest part of retail. Understanding how much to own, where to sell it, how deep and wide your assortment should be. Those are always the things that kill brands and kill retailers. And so I think AI can definitely help. That's not always necessarily the domain of an LLM, because I mean, what we call AI and machine learning has been around for decades, and supply chain planning is kind of in that, where LLM can be helpful is as a natural language interface to all those things that people maybe have been developing in terms of like forecasting models and things like that. So I think that's interesting. On the marketing front, at the end of the day, the value of your business is based on your customers, and how do you understand who are your most valuable customers, how to take care of them better, how to move them along their purchase journey and expand their relationship with your brand. It's just so critical. And I think some of that is AI, and a lot of that's not AI, to be honest with you. Right? So
It's funny. I don't think I told you this, but the Orita, both my I'm a history major in MBA, so I'm useless, but my co-founders are both ML engineers and world class.
Right.
And really for a while, we were so reticent to talk about AI. And our company has always been Orita.ai, but that's because .ai was $10 cheaper as a domain than .ml years and years ago. And I think one of my biggest bugaboos is people talking about agents where it's not agents, where it's like, oh, there's an algorithm and like it's spitting out an answer. And it's
Right.
like, if you were to go on Uber and you were to get a different price, is an agent giving you a price, or is it like, hey, the algorithm's working? Going more specifically to your comment about kind of the retention side and like that customer journey, I think the place where we are most interested is actually tied to something you said earlier in the discussion around converting attention, is all the investment, and I think appropriately so, is in converting attention. So it's like, how, if Rick and Aaron have both purchased from a brand before, how do you not give us the exact same journey, right? How do you make it so Rick gets the discount that's appropriate for Rick? And oh, by the way, Rick likes lifestyle imagery, but Aaron wants a deeper product image and at this time of day or whatever it is. And what we are seeing is a big investment in what I think of as like context-aware personalization. I think the thing that is missed is marketers talk when they have something to say. And so the conceit behind Orita is much more like, how do we talk when Rick is listening and through what channel is best?
Yeah.
And so like there's the converting attention, which is where all the investment is. And it's like the Klaviyo AI is awesome. And there are these like companies that'll give you the like, it's cold where Rick is, so therefore like send him this email, but it's warm where Aaron is, so send him this email. And I think all those are like really great, right? And then the flip side is like, does Rick even care to hear from you right now? Or are you just like yelling into the wind? And I think missing that, like, how do you capture attention is like a big unlock for a lot of brands.
Yeah. Yeah. This reminds me of a lot of the discussions that you see on like what Facebook got really, really good at with their app and notifications and email reminders and like, hey, you haven't logged in for a while. You know, your mother-in-law just said this about you. You know, shouldn't you respond to it? Or
You should definitely not respond to it.
Exactly. No, I'm just kidding. Or so-and-so made a political argument you're going to hate. Like, maybe you should log in today and continue rage clicking through Facebook. I mean, and so the dim view of Facebook, it's like monetized rage. And that is based on exactly what you're talking about, which is like figuring out what triggers user, when to contact them about it, and knowing what action you're trying to get them to take next.
An advertiser, you know that Rick is there and scanning. And so like you're going to see it because his attention is already captured. So now the question is, can you convert it? Yeah. And the flip side is on retention marketing. Like you don't have permission to interrupt my work email or my text or not, right? Like you need to really hit me up with the right content, but also at the right time.
Yeah.
All right. We're going to wrap up. This is really fun. I've got like 400 follow-up questions that I'll save you for like episodes 2, 3, and 4 that we do in the next couple of weeks.
That sounds great.
My 2 last questions for you, because you've given a lot of advice and I've taken pages of notes already. Is there any advice you have for like that mid-market brand that you really want to say that you haven't said yet, that is, whether it's tied to like BFCM or walking into 2026 or how they should be thinking about kind of the AI world that they're entering? You can go wherever you want.
Yeah. I mean, look, one of the biggest messages that we try to relay to brands is there's only 2 currencies you can trade in. You can trade in price or you can trade in trust. And once you start trading, it's almost like I'm kind of a Star Wars geek. It's like trading on price is like the path to the dark side, because like as soon as you're never discounting enough to satisfy the percentage off or the discount that those shoppers will want. And I think it's kind of like where Bed Bath & Beyond got to, and other players that get down that path. It's like the other path is much harder, meaning like you're constantly selling value. You're constantly trying to build a tribe. You're constantly trying to do things that elevate your perceived value and your status. There are plenty of reasons, like if you talk to like traditional ad execs, like why do people buy anything? Like to make themselves seem smart, to make themselves seem sexy, to make themselves seem liked. There's all of those things that are not about the price. And I think whatever it is you're doing, if you're trying to be, most brands in this realm are trying to sell access to some kind of exclusive group. Meaning like, if you buy one of these things, you're going to be like these people you want to be known as. And so I think that rather than just sort of saying like, what's our discount going to be for Black Friday? What kind of brand will be known at if you just take that money and work on your product with it, make your product that much better? I think that, to me, that's where retail is always the most exciting, is trying to elevate your game.
Rick, that's wonderful. Thank you. My last question for you. Where can folks find you right now?
Yeah, people can find me, always the first place. You can find me on LinkedIn, search for Rick Watson and just send me a message. Happy to, but my website is rmwcommerce.com and my email address is rick@rmwcommerce.com. So happy to have people reach out.
All right, Rick. Thank you. This was wonderful. Appreciate your time and can't wait for the next one.
All right. Thanks so much, Aaron. I really appreciate it. Thanks for having me on.